Hey everybody, Thomas Morgan here with 1031navigator.com. This episode is a mini-sode. It is an excerpt pulled from our recent conversation with Aaron Crowley from Asset Preservation Inc. Asset Preservation is one of the largest qualified intermediaries in the country. This episode explores a specific listener 1031 question. And remember, if you're looking to move from a management-intensive property or a low or no income property into a secure, long-term net lease property that provides peace of mind, then go to 1031navigator.com/free, and I'd be happy to provide a free 1031 replacement property consultation. I only do a couple of these a month, and right now I only have one left. You can go to 1031navigator.com/free. Enjoy the show. Another big question I get is, can you 1031 exchange into a stocks or a REIT or into an LLC? And those are all kind of three different things. And you could even add DST to the list. But so that would be the question.
Okay.
You know, what other things besides real property can you exchange into?
We touched on those a little bit with the Delaware Statutory Trust, which is which is treated as real property, but is actually an investment. You have
a fractional ownership.
It's a beneficial interest in a property that is wrapped in a trust. So the wrapper is a trust, and you can buy a piece of a part of that. Just like you can take a tenant in common and buy a piece of a tenant in common property. But you cannot buy into an LLC. You cannot buy into a stock. And you cannot buy directly into a REIT. You can have a tax-deferred transition into a REIT if a REIT comes up and says, I want your building. You've got a strip on that building. We want it in our portfolio. We're going to offer you units
we call them UPREIT transactions.
So an UPREIT, but it's different than an exchange. So it's not an exchange, but it is tax-deferred. However, the Delaware Statutory Trust is exchangeable. And you can take your ranch or your condo or your property and exchange into a Delaware Statutory Trust, which is a beneficial interest into an institutional grade property. Then there are some that are part of REIT companies, and then that REIT company can offer UPREITs to those owners of the DST. So you go from real property to DST, then you end up in a REIT.
In a REIT.
Throughout a process in time. And you know it. I mean, you're buying into those certain ones.
And eventually you can convert that to become stock, that if
Correct.
they become publicly traded, it's traded on the stock exchange.
Now it's liquid.
Right.
Now you can sell it, but you lose any tax benefits. So can you go into an LLC? So that's a good question, because we have to make sure that whatever entity starts the race or sells the property needs to be the same entity that closes the property. So a lot of times people are buying investment property as a corporation, as an LLC, as a partnership, as a subcorp, as a trust. There's all sorts of different ways that they're buying, and we've got to make sure that the tax-paying entity, it may not be what shows up on title. The tax-paying entity could be something different. So if an LLC shows up on title, if Thomas Morgan LLC shows up on title, that's great, but I don't know who's the tax-paying entity or Thomas Morgan LLC. If your LLC is you and Becky, then that's a partnership, and it has to stay in that partnership. That's the tax-paying entity. If it's just you, then it's a disregarded entity, and you can buy in your name or another different.
And something we see in our day-to-day business is we call it the same taxpayer rule. And if someone sells from their personal name or an LLC, but they want to form a special purpose entity or a single purpose entity, they can form a new LLC as long as the original exchanger was 100% owner or is 100% owner.
Right. As long as we keep that ownership consistent. But a lot of times it's confusing to a lot because they forget that LLC with two people in is now a partnership, especially when there's couples, because husband and wife LLC is a separate ownership. So when they go to buy the replacement property and the bank says, we're not going to loan to an LLC, like, what can I do? Well, or what I get is a lot of people will say, Aaron, I've got a third property. I own a third of an LLC. We've got an office building. And I want to take my proceeds and I want to do an exchange. The other two do not. They want to do something else. They want to cash out. They want to go to Bahamas, something else. So can I do that? And I say no, because you have a personal property interest. You do not own that property. If your name is not on the deed, on the warranty deed, I can't do an exchange with you. So what they have to do is go to their accountant and their attorney, and timing is crucial because we don't want it held for sale. We want to make sure that they held it in that vesting has been seasoned for a while. They have to do what we call a drop and swap, where they're going to drop out of that LLC. They're going to unwind that partnership, drop everybody to tenants in common, do a quick claim deed, record it. Now we have everybody on title. Now each of them can take their 1/3 fee simple interest and do an exchange.
But
prior to that, the partnership could exchange, but individuals cannot.
With the drop and swap, you run into liquidity issues, though, if the other partners can't buy out the partner who wants out, typically.
If they're going to buy out, yeah, that's different. But if they do a split, then then they each have a fee simple ownership. They each get their proceeds as they get, and these two will owe taxes and this one will exchange. If you're dropping out of the LLC through the LLC, like the LLC is going to continue, let's say it's the opposite. There's an LLC, one person wants out, the other two want to stay. Two people will make a partnership in an LLC. The LLC can go forward. They got to drop this person out. So then they need to talk with the accountant.
And we could do a whole episode on drop and swaps as well. That's one of the more complicated things, especially in family partnerships that have been set up a long time ago, and there's 8 people that own it and 3 want out and
they don't like
3
each
want to
other
go
anymore.
in this. Yeah, exactly.
True.
If I had $1 for every time someone said they don't like someone anymore in their partnership.
Yeah. There.
That does it for today's listener question. Hopefully you got some real value out of that. To ask your own commercial and investment real estate question related to 1031 exchanges and or triple net properties or other passive income real estate, please visit 1031navigator.com/ask. Again, that's 1031navigator.com/ask. You can also leave a question by leaving a direct voicemail at the podcast hotline 970-300-1994. Again, ask your question by leaving a voicemail at 970-300-1994. Thanks for listening to the 1031 Exchange Passive Income and Investment Series. Hopefully it's helping you create, build, and protect your wealth. Talk to you soon.
And remember, this show is provided for your informational and educational purposes only. Be sure to check with your accountant, lawyer, and or other tax professionals and advisors before relying on this information. Although the information contained herein is believed to be accurate and reliable, we do not guarantee its accuracy or completeness, and it is provided without warranty. Common sense is the best practice.